BloombergQuint. I'm your host, Niraj Shah. The talking point today are the views of Dr. Velumani on the space that he's a new entrant in, so to say, and how does he see that? Now, I would like to start off this conversation. Dr. Velumani, firstly, of course, thank you so much for spending the time and talking to us. Lovely having you, and a lovely story that has been told multiple times, and we'll try to tell that one more time. But thanks for joining in today. Okay, now viewers, I want to start off with this tweet screen, but I'll nevertheless pull it out once again. A 27-year-long, engaging, motivating, emotional thriller movie, live, real and not real. Ticket 2 lakhs, entered in the theater in 1995. I was forced to exit in 2021 by you. Was this a temptation of the crores, or was it a temptation of what you arguably see as the way forward for the space that you are/you were in, so to say?
It's not a single factor, but there were multiple factors. And I just tweeted to tell all 27 years I enjoyed. And the movie was having all aspects of fun, thrill, excitement, everything. And pata nahi hai how 27 years went so fast. And then finally, I was told, this is your check if you go out. And check was very tempting too. And there were too many dozens of factors that were part of this decision. I just wanted public to understand I enjoyed all those years, and it was no pain. It was not even anything to be seen as a reason to come out. So I think that was emotional. If you read the last statement in that tweet, it says, my wife was the director and I was just the hero. To tell that movies are wonderful only when the director makes the hero to do exactly what the director feels will appeal to the audience. So that I wanted to bring out, and that's the tweet.
Okay. No, okay, fine. So let me try and rephrase my question, Dr. Velumani. People who give their company into others' hands, so to say, have the option of completely exiting and enjoying the monies that they get, or staying invested in some form or the other in that business because they see a potential. What I want to understand via this interview is the potential that you see in that space, the potential that you see in the existing diagnostic business, of course, but complemented by the digital presence of your partner.
Yeah, it's very difficult for one to exit at this point of time when your share price has rallied from 400 rupees to 1200 rupees. And you can always feel, some more can happen, lot more can happen. And a lot are also going to happen. I knew very clearly when I am taking a decision in my interest and in the interest of the company. The space is going to be very wonderful for diagnostics. I had been telling for the last 18 months, ever since COVID came in, ever since everybody sat only in the balcony for literally months and quarters, I knew health is going to be a very big priority. Awareness of health, awareness of diseases, people are now very, very different. So what was a 12% CAGR for the last 20 years would be at least 24% CAGR for next 20 years. This is my anuman, my expectation, because I've seen this industry for the last 40 years. So it's very exciting, but at the same time, I'm getting old. At the same time, I somehow felt a young blood, aggressive young blood, the ones who sees a very bright tomorrow for entire healthcare might do a big job. than just standing and selling in the market space only diagnostics. This deal has a lot of connotations. So will be its implications. So will be its outcome. It could be a historical deal which was signed on 25th of June 2021.
Could you talk a bit about that? When you say that this has number of connotations, could you take your time and explain that?
See, in islands, all these healthcare solutions are not delivering what a customer wants. He has to run from door to door, man to man, to get his solutions. I think what these digital solutions, whatever is happening, be it in fintech, be it in every solution where IT is impacting positively, the health tech, which we call as all solutions needed for health under one brand or one solution, is a right time it is to come. I was thinking it would come by 2025, but then COVID has catalyzed its entry much earlier. And this means the patient has one place where he will find a solution. That means he gets a doctor there, then the doctor decides the test there, then the test decides the medicines needed, and the medicines, after medicines, the doctor once again reviews, and the data is there. So it is a continuum of the solution which patients must have dreamt, and it's happening. And this will certainly disrupt diagnostic alone players, pharma alone players, even hospital or consultancy alone players. So it's going to touch everyone in the healthcare as a space, and it's a huge space, and all three put together will be very big. So it's worth getting into there, and that is why I have agreed to invest in their company simultaneously, which says that I'm convinced about that story better than even the story which I was running.
That's interesting, Dr. Velumani. I meant to ask this to you. I was speaking to somebody who looks at the healthcare and the pharma space very closely. His view was that the diagnostic companies got listed on the bourses not because they wanted capital, because their internal inherent cash flows, etc., are all very, very strong. They got listed because they get indirect marketing by virtue of getting listed, because the size of the market is such, or the nature of the market is such, that organized diagnostic players are only 10-15%. And therefore, the land or the runway for growth is long for a number of years, and they'll continue to grow at 15-20%. Do you reckon that, one, was that true? And two, that without a tech piece attached to the diagnostic business, the way Thyrocare now has, it might be difficult to run this race at a 15-20% CAGR for the next 10-20 years that you spoke about?
Yeah, if you look at it, all the three diagnostic listed players have had never a need for money, always cash rich, always had enough for more than enough to even buy many brands and companies. And especially Thyrocare, it has a unique history of no money from an outsider has come inside the company. The PE I did was secondary, the IPO I did was secondary. And today also it's only the promoters take money out, company is not getting any money. So money which was just a 2 lakh rupees has now become $1 billion. You calculate the ROI, you will not find any way easy to get a number. So having said that, yes, it's a very, very unorganized market. A lot of scope is there, but it's a bit complicated industry where customer decides or the doctor decides, and what criteria doctor decides. A lot of unorganized players. It is huge profit even for a small volume operator. The pricing is not in place. Pricing was in place for a retail small volume business. When you do a large scale business, you have huge profits. So the entire costing and pricing will have to undergo a huge change, which was undergoing quite a slow pace with the three players listed and all of them trying to retain the profit and trying to grow. Both are going to be very difficult. For the last 5 years, I have noticed that my profits are improving, but my growth is not happening. I have been criticized for not growing adequately. But having said that, if you look at the space in which the pharmacy is in, they have no profit, too high growth. We have too high profits, not adequate growth. And they are desperate for showing some profit in their balance sheet to impress their investors. And that has been probably the main reason why they found this is a strong company with a vast network, with a good cash management, with adequate profits for that kind of a top line. So it is in fact a wonderful amalgamation when the amalgamation truly happens for the company. But having said that, it will take a long time for the market to respond and react to the unified solution which is put on the consumption. And there are a lot of challenges, but having said that, I see no choice for other players other than looking for a counterpart. If you're only a consultation, you are not a complete piece. If you're only a e-pharmacy, you are not a complete piece. So in fact, it's not a marriage of two, it is marriage of three or more, which would make somebody to feel I am having a solution in one platform.
Interesting. Okay, so a couple of follow-up questions to that, Dr. Velumani. One of them is what you just said, that you've been criticized for not growing revenues, but for growing profits. Now, in a scenario wherein organized was anyway so low and the runway for growth is apparently going to be so long, why is it that not just for a period of 6 months or 1 year or 1.5 or 2 years, but for a considerable period of time, the growth on the revenue front was not happening? Is there a reason why, as you sit back and analyze as to why is that not happening? And do you reckon that this partnership might actually bring about the revenue growth for that diagnostic business specifically?
Yeah. When I said I am not growing, it is not that I was not growing. I was growing around 18% CAGR for the last 5 years. And when I said not growing, it was not that my organized competitors were growing 25-35%. They were also plus or minus 2% quarter to quarter.
Yeah, what I mean is up to the potential possible. That's what I mean.
Yeah, the reason is the unorganized is having still a lot more hold on the market, especially when you don't have any regulations really putting pressure on. Anybody today, technologies are available, the vendors are willing to put in. If you have a floor, they will put in everything without any capex, so you don't need any capex to start. And a lot of PE money also has come into very small players. So everybody is burning and everybody is in the runway, and no one is taking off, but the energy is lost. Now, this has put to the organized players, wait, everybody is learning lesson. Once they understand, then you can grow. It might take 5 years, 10 years, 20 years. So if you ask me, the major block was no regulation. Everybody is in easy money, quick money. When you have very low volume, that is 5 crores of turnover, you have 50% EBITDA because you don't pay even a tax there.
Okay, so you do reckon that if indeed there are some regulatory changes much needed, as you said, happen, and then eventually the growth rate, and for the betterment of the customer as well, maybe the growth rates for the organized would expand if they do the right things. I'm presuming that's what you meant.
Yeah, exactly. Pharma company, everybody cannot start. Pharma has some kind of blocks. So if you are audited, controlled, monitored by agencies for your operations quality, there will be, instead of having 200,000 laboratories, it will be 20,000 laboratories. That will be the best possible way of making the industry to deliver better, faster, and also profitable.
Yeah, and better for the customer as well, so to say, in terms of the quality of the test coming in. I have one more question on this space and the way ahead, Dr. Velumani. I remember when you IPO'd, I was in ET now, and we on the day one of the IPO we were talking, and you had mentioned then that you thought that diagnostic companies charged a lot more than they should, and you would want to bring about a disruption there. Now, when I read after this deal that you've struck, when I read a few reports, some of them say that the belief is, and I'll read it out from one of the reports, that the belief is that post the Thyrocare acquisition, there would be pricing headwinds in the B2C channels, such as online bookings, home collections, and the wellness segments, which could impact all the existing players. Do you reckon this is a near certainty, or do you reckon this is a possibility?
See, the blurring line in between B2B and B2C was a little confusing. I disrupted a lot in B2B. B2B means somebody who collects the sample from a patient and then looks for a solution. And I was a master there, and I did enough of disruption. B2C disruption is a huge population of 1.3 billion, reaching to common man, telling him about diagnostics, selling diagnostics as affordable, convincing him is not an easy job. It needs probably billions of dollars to be spent so that you can accordingly create a huge impact. So what I felt when this deal was happening across the table, मैं तो B2B में बजाया, ये लोग B2C में बजाएंगे. This was my mind which said that I did not bring solution to the common man, I had brought solution to the middleman. The middleman today is having a huge margin. Not only my brand, all brands. Because there is no awareness for a common man about medical diagnostic tests. So it is likely by year 2030, the diagnostic test could be even 40% less than what it costs today to a common man. There is a great example I want you to understand. Why did I truly think through that? April 2020, RT-PCR test is 4,500. April 2021, it is just for 450 rupees. That means what? Sarkar got into it. Sarkar pushed it, and it happens. So there is a likelihood somebody who has power to push it down. Common man cannot afford to keep spending like this lifelong, though. In India, we are still paying much less than what we are paying in the Western world. But I have a reason to believe we are 1.3 billion population, and this population should give volume, and that volume should dictate to the world what is pricing.
Okay. Well, it's great for the customers. So I'm all for it, I must tell you. In which case, last couple of questions, Dr. Velumani. You seem to believe, or you seem to be painting a picture, and please tell me if I, as a director, am painting it wrongly, or as a painter, am painting it wrongly, that the way ahead over the next 2 decades is, yes, a period of high growth, but profitable growth only if there is a marriage between the 2 or 3, how do I say, verticals in this space, so to say. Otherwise, people may find it challenging. And we are probably, or most definitely, moving towards a period of high consolidation in this pocket, wherein the number of labs would come down due to whatever reason, and higher quality healthcare would be available to almost one and all. Is that the picture, so to say?
Yeah, in that way, the number of players will be limited, and they have to deliver to the end user what he is dreaming, and his dreams are getting every day, the fantasy is getting every day amplified. So there is a possibility in the next 5 years minimum and 10 years maximum, this entire space will be very different. All unbranded, unorganized will find it difficult to thrive and grow. Whereas the maybe 10 players, maybe 20 players, we don't know how many players. I am clearly seeing the consolidated players will be not less than 100 unicorns. It is not that somebody will run away with everything. There is possibility of a state brand. There is a possibility of national brand. A lot of things are possible. How it evolves, I don't know. But existing, unorganized, illogical pricing, unheard of or unknown quality. All these things will be things of past.
I'm sure you've already given all the advice that you need to give to these young champions who partnered you, bought over your stake. But if you were to look at and tell them the one thing which you can share with the public as well, what is it that you told them, Dr. Velumani, about how to carry this business ahead for the next 10 years? I'm sure they would have sought your advice and probably still do.
Yeah, in that way, I always said to them that the customer is ultimate, customer's happiness, customer experience. Not that anything new I am telling, they are all new age business school products. I am an old age farmer who happens to have a great run in the diagnostics business. But I know the customers' expectations. In fact, I told them, you have to charge the least. You have to pay to your employees the most. You have to give to your investors the biggest. These three are going to be the biggest challenge. You just can't ignore any piece.
Okay. Dr. Velumani, thank you so much for spending the time today and speaking to us about a number of issues which maybe we didn't get a chance to speak about earlier when the deal happened. But thank you for that. And keep up the great work. Your story is very inspiring.
Thank you, Niraj. Thank you.
And viewers, thanks for tuning in to this edition of The Talking Point.